I'm a tax lawyer. Most people don't know what a tax lawyer does. So what I do is I provide a lot of technical assistance to accountants. So when accountants got questions on tax, they come to me for advice. And I also help clients when they are in trouble with the ATO. So I basically help them, and act for them to either fight the ATO on their tax debt, help them through audit situations, or basically just apply for relief on their tax debts or interest payments, or help them through audits when they are audited by the ATO. So I provide a lot of, the interpretation of the legislation. Sometimes the ATO is wrong in how they read the Act and how they apply tax law. My role is basically to help taxpayers in terms of the legal aspects of tax.
Yeah, how did you get into that, Jeff? I think that's really interesting. So now you must know so much about all of the legislation and regulation. So how did you end up going into that? Were you a tax accountant first and then moved into that position over time?
No, there's a specific division in a lot of the bigger law firms that specialise in tax. When I was a graduate, that's where I was, shoved into. Yeah. I didn't know what tax law was all about. Like most people, I thought that accountants are the people that deal with tax. But as I, work through, with that law firm, I discovered that a lot of it there's a lot of grey area in relation to tax law and how people can read it and interpret it. That's where the entire tax lawyers industry gets sprung out of.
Do you find a lot of people might just, if they get audited and then the taxation office might say, you owe this, or you have to do this, or you must, this is the demand to you, they just accept that when they possibly could have got out of it or lessened the impact on them and their business and their lives, do you think?
Oh, definitely. The ATO, there's a lot of fear and intimidation from, people are very fearful and intimidated by the ATO. And there's a lot of instances where the ATO actually has got the law wrong, or they basically don't quite understand what the law is, but they just apply whatever is best for revenue collection purposes.
Yep.
A lot of accountants, because they are so busy with a lot of their clients' affairs, they don't have the resources or the skills to research as to what the true legal positions for their clients are.
Yeah.
And a lot of accountants are not aware of tax lawyers being accessible, because most of the time they think that the only people who can afford tax lawyers are the big end of town, but there's a lot of tax lawyers out there who are accessible to the smaller businesses to help them.
Yeah, cool. No, that's really good to know, and I think that's going to empower some people that might be in tricky situations in the coming months, if not years, ahead of us. So I think, that's could reach out to Jeff if we need some support around that. So let's jump into some information on specific stimulus package documentation that's come out already. So if we could just go through some of these points and have a talk about how this is impacting small business and medium enterprise and how they can better understand the documents and how it's applicable to their businesses. So if we can kick it off with the boosting cash flow for employers.
Yeah. So the legislation just came out yesterday, on the back of the Prime Minister's announcements. So there's all these materials online at the moment from Treasury, which is a department within the government, and they've given out, information which I suspect would be off, the plans from the government announcements, but how it actually works in detail is actually contained in the legislation itself. So that contained all the rules as to, whether you are eligible, when you need to be registered in order to be eligible, and the actual calculation of how much you're entitled to. That's all in the legislation. And that's, I guess, when people are sitting on the fence as to whether they're eligible or not, that's the job of actually interpreting the legislation, and essentially that's the rule book of it all.
Yeah, sure. Yeah. So what are some things that you've noticed in terms of that particularly? So some people might have gone, oh, I'm a sole trader, can I change to proprietary limited? Is that an example of that? What are some other examples, or is that an example of some of the things that people are thinking, should I change or can I change?
Yeah, well, firstly, it doesn't matter how you are structured in terms of running your business. So you can be a sole trader, you can be a family trust, you can be a company, or you can be a partnership. The most important criteria is that you've got to be what they call a small business entity, which is an entity that employs people and have a turnover of less than 50 million. And that 50 million is as of last financial year, not the current financial year. So this financial year you could be, turning over 100 million, but if last year you were turning over 50 million, you would qualify for this payment.
Sure. Do you think anyone's going to grow by that much in the next year?
Probably not, but you never know.
Yeah, cool. So in terms of, that's really good to know, because I know a lot of my clients were wondering, oh, I'm a sole trader, so I don't get the benefit. So that's really good to know that even if they are a sole trader but they employ someone, then that's really good. Can they employ themselves as a sole trader?
Yeah. There's no restrictions on, what they call related parties. So, if you employ your wife or your sister or your brother, that's all eligible employees. So what they mean by eligible employees are that you have to pay or withhold some of the money from their wages. So it's like when you were working for somebody as an employee, you might be on 50 grand a year, but you don't get the full 50 grand a year in your bank account. You get the after tax dollars in your bank account.
Yeah.
So the difference between the 50 grand and what you get in your bank account is what the government and the technical people call PAYG withholding. So your employer is supposed to have deducted that amount and pass it on to the ATO as payment of taxes for you. So that amount that is passed from your employer to the ATO, that's the amount that they use in the calculation of how much of this $100,000 you're entitled to.
Are they calculating that off the year to date, like financial year to date, or how is that being calculated? Can you just put your, a week ago, just say that your sister started, and that would be eligible for the minimum, I guess, because they didn't pay them anything, paid them $1.
Yeah. So, and I guess it's a little bit generous in this legislation in the sense that all it requires for you to be eligible is that you have an employee and you are supposed to have withheld money. So you don't actually have to physically withheld. You just need to be, be required to withhold money, and you'll be eligible for the scheme.
Right. So effectively, it's like, yes, I was withholding money.
I'm supposed to be holding money, so yes,
Yep.
I'm eligible. So
Yep.
yeah, so there's a lot of businesses out there that, because of cash flow problems, haven't withheld or used the withheld money for boosting up their own business, which is not what you're supposed to do. So those businesses are still eligible for this payment, but it's just that the ATO might be going after them in a different format. That's all.
Yeah. Okay. And is there a way, for instance, a director pays directors' dividends to themselves? Can a director put themselves back on wages for the year to have a bigger withholding tax?
Yeah, they can do that. There is some provisions in these legislation to catch any sort of contrived or any artificial inflation of the amount that you're supposed to get.
Yep.
And it's worded like the anti-avoidance sections in the tax legislation. That part of the legislation is actually very complex, and I don't know whether they would actually apply those anti-avoidance section to people who are trying to inflate the amount they get from from this stimulus package. But they've given power to the ATO to deny payments in full or some amount. So you just have to be careful about how much increase you're going to give yourself. So if you have reported over the last couple of years to have very, very minor PAYG withholding amount, and then all of a sudden your PAYG amount goes up to $16,000 to get the full $100,000 grant, I think the ATO would look at it very carefully for you and may even deny the payment to you.
Okay. So in terms of withholdings, what if it went from, say for instance the example is you've got 20 full-time staff and then you're just adding your director's dividends back, so the difference would be quite a small amount as a whole. Would that not really be flagged because it's not really inflating the total amount?
I think it should be okay. You just have to be mindful that with anything with the ATO, there is a certain level of risk if it's not genuine. In audit and like in sort of disputes with the ATO, they are entitled to, under the law, to essentially deny you without giving reasons, and it's up to you to prove them wrong, which is like what we call a reverse onus situation. Whereas, like in criminal law, if the police accuse you of something, they have to prove that you actually did it. But in tax matters, it's up to you to prove them wrong and up to you to show what is the right course of action or what the right position. And a lot of people, when they come to disputes with the ATO, don't have the written documentation and the written evidence to prove their entire situation. And as a result, a lot of taxpayer loses in disputes with the ATO because they can't prove their own case. So if you're going to look at increasing the amount of the stimulus package, what you actually need to do is make sure you have the documentation to back up a commercial case as to why all of a sudden your dividends have stopped, but you've increased taking out a wage.
Yeah, sure. Okay, that makes sense. Cool. I know a lot of people have been talking about that, so that's great to get some clarification around that. And yeah, so in terms of, do you know what the scale is on from who will get 20,000 and who will get 100,000? What was the scale there? I think you mentioned it before.
So it goes off your BAS return. and it goes off the actual amount of money you're supposed to withhold for your employees during that period. So if you say if you withheld $20,000 over the course of 3 months, they would divide that 20,000 into 3, and then times it by 3 to give you the actual amount that you will get as the first payment. So the first payment comes out to you after you lodge your BAS in April. So late April, you'll get your first payment. The second payment comes out in June, and it's a percentage, being 25% of your first payment. And then the last payment is another 25% of the last payment.
Oh, so it tiers down.
Yeah.
Okay.
So, and then it depends whether you're supposed to file quarterly BAS returns or monthly returns. But the amount basically ends up being the same, whether you file monthly or quarterly. And it really depends on your turnover, whether you're supposed to file quarterly or monthly. Most small business are only required to file quarterly rather than monthly.
Yeah. So do you know what the actual dollar amount of withholdings tax is to get the 100,000?
It's about 17,000
for 3 months.
No,
per month?
for each month.
Yeah. Okay. Yeah, that's about what we pay. So that's
50 grand. Yeah,
that'll be about 100. All right. Cool. But yeah, it's capped at that, obviously. So if you get 20,000 a month, then you're going to be just still 100.
Yeah.
Cool. All right. Thanks for sharing that. That's good. Is there anything else that people should know about this particular point?
There is. You've got to be. So there's a bit confusion with the tax industry about whether you actually need to be registered by a certain date. I know a couple of accountants that we deal with says you have to have been registered to be a PAYG withholding entity by the 12th of March. But there's nowhere in this legislation that says you have to be registered by that date. It basically says if the ATO is satisfied that you are an employing business, you're eligible for this payment. Now, the thing with the ATO is it may say one thing in the legislation, but if they've got it in their head that it's not supposed to be like that, you are up for a fight with them, or you might be coming to a dispute or some sort.
Yep.
There's people in the industry saying you have to be registered by the 12th of March. I don't see that in the legislation. If you're on the fence, then I suggest you look at trying to get the grant anyway.
Yeah, register now if you haven't already. Yeah. So an example of that would be, and I've got a lot of clients in my academy that are going, I've been employing since January or February, but they haven't lodged anything yet. And so they're wondering if they have employed though. So from what you're saying, I would imagine that they can say, yes, I've employed since February. I just haven't made my first payment. And some of them wouldn't have registered for PAYG because they haven't needed to yet, because they hadn't had to make that payment yet. So yeah, that's sort of that grey area, I guess, and good to have that clarified. Cool. That's really good. Thanks, Jeff. Lots of information there on that one. So appreciate you going through that. All right. So the next one we've got that we're going to cover today was delivering support for business investment. So that one there was for, small business loans and also instant asset write-offs. So can you run us through a little bit about what you know about this one, please?
Okay. So with the instant asset write-off, so any asset that you buy for the business that your accountant can depreciate, so like cars, computers, tools that you use for your business. Usually So usually for tax purposes, they're what they call asset that can be depreciated. So they decline in value over time because, you buy your car for 30 grand. Next year, it's worth 25. The year after that, it's worth 10. So that's what they call a depreciating asset.
Yep.
So with the instant asset write-off, that came in during the times of the GFC, where they want to encourage people to buy things like this to keep the investment and keep people spending. So what happens is when you buy an asset, you can't claim the full amount, and you can only claim a percentage of that amount each year off your tax. With the instant asset write-off of $30,000, the government is allowing you to write off $30,000 from your income for every asset that you buy. So if you make $60,000 a year and you buy an asset of $30,000, you can then claim $30,000 off your tax. Off your income. So your taxable income is only $30,000. So that's what the instant asset write-off is. So the instant asset write-off is now $150,000. So you can basically buy a top of the range Range Rover for $150,000 as long as you use it fully for your business, or you can buy one of those Ram Utes for 150 grand, and you can write it off your income, by June. So that's what the instant asset write-off is, and the instant asset write-off is per item. So if you have a lot of cash and you want to buy 5 of these Ram Utes, that it means that you have a tax deduction of $600,000 to offset against your income from your business.
Yeah, great. So is this just businesses, or is this personal as well?
Businesses, sole traders, you have to be running a business. Okay. So essentially you have to have an ABN and you must be working for yourself.
Okay, yeah, that's good. Do you need income? I know some people have an ABN, but they don't actually use it very much. Do you need a certain amount of income for this to be available to people?
If you're running a business, if you use an ABN, technically you're running a business, but sometimes the ATO will argue you're not running a business, so they deny the deductions. Whether you're running a business or not is sometimes a grey line in a lot of tax disputes.
Yep.
I know I've got clients who run, a farm, but they're not doing too much because they're a little bit older. And then they're trying to claim all these deductions, and then the ATO goes, "No, you're running a hobby farm, so it's not a business."
Yeah. But
on the other hand, I've got younger clients who, maybe running a hobby farm part-time, and they're selling off their cattle or plants or whatever, and then they claim that it's a hobby farm because, they might be lawyers or accountants, and they do this on a weekend basis. And the ATO goes, "Nah, you're running a business, so you have to pay tax."
Sure.
So sometimes the ATO will, bend the facts according to what's in their best interest.
Yeah.
So if you're on the line board, you really do need a lot of supporting evidence to support whatever position you want to take.
Yeah. Okay, cool. Is there any really situations that you would see a business where they should go and invest right now? Or is it better that they keep their money available to them? Because this is still available through a chattel mortgage as well, right? You still get that?
Yeah, for chattel mortgage, yes. It really depends on your cash flow position. I mean, the thing with these instant asset write-off is it sounds really good, but as we all know, cash is king in a business, especially in an environment like this.
Yeah.
So you might spend 150 grand, which immediately, you got to start, shelling cash out for, but you may not be able to claim, or you won't see the benefit of that spending until your accountant lodges your tax return, which, for most businesses have until October or May next year. So although you might spend the money, you get the tax deduction, but your actual tax liability is not due for another, good 6 to 9 months.
Yeah.
And spending 150 grand for a company, the tax benefit is only 30% of that. So you got to spend 150 grand to save, maybe 50 grand in tax.
Yeah. So
I wouldn't really go out and, buy that luxury Ram Ute just because it's 150 grand and I get that as a tax deduction. But if you're thinking of buying something next year or, in the near future, it might be worthwhile to speed up that decision so that you get the benefit in this financial year rather than next financial year.
Yeah, like you said, if you've got it on the 2nd of July, you would have to wait all the way till the 30th of June, and then until your accountant lodges your tax before you got that money. So, and this doesn't go past 30th of June anyway, does it?
Yeah, that's right. So if it's either you invested in June and you get the tax upfront tax deduction, or you buy it in 2nd of July and you don't get any tax deduction, that's the only time that would come in.
Yeah, for sure. Cool. All right, I think that one's covered. Anything else to add to that one? This next one, I'm looking forward to hearing your opinion, because before we started talking, we had a bit of a discussion about it. And so it's the temporary relief for financially distressed businesses. Mm-hmm. So just run us over a little bit about this, and I'd like to share some of my concerns and see what you feel about that.
Yeah, sure.
Cool.
So what, in a nutshell, what all this is about is that if you get a statutory demand from one of your creditors, or when you are owed money and you serve one of these statutory demands, the normal course of action is that you have 21 days to respond to that statutory demand. Now they're expanding that to 6 months. Now, this is quite a very narrow benefit as such, because statutory demands are only served on companies. So if you're a sole trader, if you're running through a family trust, a statutory demand doesn't apply to you. And statutory demands are actually quite, it's quite a long process, and it's pretty much the end of the line for a lot of creditors to use statutory demands. So I don't really see too many people being affected by this, other than your medium-sized business who are actually running as a company.
Sure. Okay. Because a couple of concerns popped up with my clients was, what if the clients now they won't pay us, and then when we serve them, they won't say anything, and do we keep working for them or do we not? We don't have that clarity anymore of whether they should keep trading with them or should they stop work. So I guess that you don't really know anymore, and especially with the volatility of the market at the moment, you got to ask the question, can you afford to pay us or not? And, especially when it comes to builders in the construction industry or any other company that has a high amount of supplies coming through, that, they've got an account with, that's the sort of situations I think that I was thinking about. But you have anything to comment on that? Yeah.
Now that actually, that is a problem that is the result of a lot of lax paperwork from builders and the people in the building industry, which I see quite a lot. First of all, there are like state-based legislation, so Queensland, New South Wales, Victoria legislation that helps people like in the subcontracting space in the building industry to get money off the contractors. So that's probably where you'll be heading first, and having a look and getting some advice around that to see whether you fall within those legislations and those protections given by those legislation. The other thing is Most people in the building industry don't take full advantage of the PPSR legislation, which is the personal security registration. There are a lot of quick, easy, and efficient, debt recovery process under the PPSR regime that a lot of subcontractors can take advantage of. For example, if you have PPSR charges over your contractors or your builder, you can basically, if they're not paying you, you can jump over them and ask their customers to pay you direct.
Yeah, right.
Whilst it works legally, you've got to be in a position to be able to use those sort of terms. So if you're big enough and your builders are in a position where maybe they've missed that particular clause in your terms and conditions, or you are enough to dictate some terms, that might be a term that you want to put in, so that if a builder does go sort of a little bit iffy, you can gazump them and get the money straight from their customers. So in the debt recovery space, when you actually not getting paid, it's actually a little bit too late, because you really have to protect yourself at the start by having all these terms and conditions and preparing yourself before you get into these sort of situations.
Yeah.
Do you want me to go into the formal debt recovery process and what it entails?
Yeah, I think that's important, that people of all industries understand, if they're owed money, what is the debt collection process?
Yeah. So in a normal situation where, you don't have a PPSR charge, or you haven't taken security for your payment, what you need to do is, obviously, you need to demand payment. So, if your terms are 30 days, then you have to wait 30 days. And then, you give them a little bit of time after that, and it might blow up to 60 or 90 days. Usually we get involved when they're at that sort of level. Then what happens is you then have to formally give them a letter of demand, which allows them 14 days to address the non-payment. So by then you've blown up to pretty much 4 months before when you're owed. Usually there's a bit of argy-bargy about, from the letter of demand, they might call you up and say, yeah, we'll pay you in 30 days, or we'll pay you as soon as we can. That drags it out to about 5 or 6 months. And then when people are getting really sick of it, we usually recommend clients to start what they call statement of claim, which is a debt recovery formal through the courts. Depending on the amount, you might start in the magistrates court or the district court or the Supreme Court for amounts over $750,000. With a statement of claim, they have 30 days to respond. And then what they might do is, if they've got some aggressive lawyers, they might go, we deny the claim, you didn't fix this, you didn't do that. So then, they might file a defence within 30 days, they might file an extension. So that drags out to about, pretty much close to a year now.
Yeah.
Then either you settle, or if you don't settle, you go to court. So that will take another year or 2 or 6 months or whatever, depending on how aggressively they fight it. By then you would be like 10, 20 grand, out of pocket anyway, with all the legal fees. If the court goes your way, then you win. Then you've got what they call a judgment. When you've got a judgment, that's when you can enforce the judgment. So they'll have to pay, and if they don't pay the judgment, then you have to start a new court proceedings to enforce the judgment. So once you start this new course of action to enforce the judgment, then you can put them into bankruptcy if they don't pay after that.
Wow.
So as you can see, it's a long road to actually go and recover the amount of money you owed. And it costs you a lot of money.
Yeah.
So most people give up if it's less than $50,000 because it's just not economical to recover that sort of money.
Yeah.
And that's why, we always recommend clients to have terms and conditions and, these sort of PPSR charge so that they don't need to go through that process and they don't be out of pocket because, they might be owed $30,000, which is quite a lot of money. But yet, from a legal point of view, it's a debt that is pretty much uncommercial to recover.
Yeah. A couple of questions there. Is it possible to have interest accruing while they don't pay over that 2 years?
Oh, yeah, definitely.
Yeah.
You get awarded interest, but, how much do you spend to recover that sort of money?
And then that was the next question. So can you get them to pay for the legal fees if they're guilty or they haven't paid?
You can. That's also another legal fight. So you might spend 20 or 30 grand and the judge might say, okay, you win and, the other side will pay your legal costs. If they're aggressive or if the relationship has soured to an extent, they will dispute the amount of money that you spent.
Yep.
So even though, say, your legal cost is 30 grand, you may not recover the full 30 grand from your debtor.
Yep.
And that might take 6 months because you will then have to prove that your legal spending is reasonable. So that might be another legal fight in itself.
Yeah, sure.
We've had fights like this all the time where the clients have won, they've got their legal costs, but then the other side's disputing the legal costs.
Because they lunch with a lawyer and out to drinks.
Oh, yeah, usually those are not billed, but they might say, oh, well, why did you spend, $5,000 on a barrister?
Yeah.
It should be $3,000. And then they'll nitpick every line in your bill and say, that's not necessary. And then you end up having to submit your case to a cost assessor.
Yeah. So just one final thing on this is if you did have the PPSR in place and signed before you started any contractual agreement with them, what would that process look like from there in terms of timeline?
Okay. If you have a PPSR charge, it makes you a secured creditor. So you're pretty much in a position of a bank where you can then appoint what they call a receiver to essentially wind up their business. So as you know, in the building industry, if you've got a receiver appointed, that's a black mark against them in the QBCC or the building licensing body of your state. I don't think most builders would probably try and stay away from having receivers being appointed because it just means that they have to explain it to the QBCC or the New South Wales Building Board.
Yeah.
So that's a powerful weapon to actually have because you can actually threaten bankruptcy pretty much, within 30 days of you not getting paid.
Yeah. Cool. No, really good. Informative there as well. Is there any situations that you might foresee people using this in a very evil way, against other companies to make sure that their cash flow is high? Like, I'm just not going to pay them. I'm not going to pay them. I'm not going to pay them. I'll tell them. 6 months.
Builders use them all the time because the smaller guys, they go, okay, well, we know from a debt recovery process it's going to take you 30 grand to recover your costs. So if I owe you 20 grand, I can take a punt to say, okay, well, does Greg know exactly how to go about enforcing the debt? If he doesn't, then we'll just not pay you. What are you going to do about it?
Yeah. So do you think in this current climate, now's the time to set all of these legal, like PPSR claims and all that sort of stuff up?
Yeah.
Get it done, get it signed.
You should, do that. You should always look at, before you engage or sign up to a job, look at all these sort of things and see if you can get them in place. If you already started and you are owed money, it's too late to do any of this stuff.
Yep, sure. Cool. All right, thanks so much for that.